Hello and welcome back to Nolan Financial Radio. My name is Chris McKinney from Nolan Financial Partners. If you'd like more information about you here on today's show, give us a call at 719-210-4242 or visit us at our website, nolanfinancialpartners.com. And while at our website, click on the radio page, check out our past shows, and subscribe to our program on Apple Podcasts and Spotify. Please don't hesitate to reach out to us with questions or set up a face-to-face or even a virtual meeting. So, though some of the things that you may have bugged you during your career vanish after you retire, the daily commute, the long meetings never seem to accomplish anything, but certain other things from your career carry into retirement, and that is taxes. That's right. For most folks, taxes are part of the retirement reality. There's property taxes, income taxes, there's vehicle taxes, there's all kinds of taxes that come your way. But the good news is there are some potential tax breaks you can discuss with your financial services professional and tax professional that may help you reduce the impact to some degree. But before we get into today's topic, I want to introduce my co-host, Tony Shore, who I know is celebrating because baseball's spring training is underway, which means opening day isn't far behind.
Well, as much as I love the fact that spring is right around the corner, and I do enjoy hearing about my Minnesota Twins during spring training, seeing what's going on. The reason I'm celebrating today is because it's my birthday, even though I want to tell you, Chris.
Oh, happy birthday, Tony.
I don't feel any older. That's the thing. And I try to tell everyone, I've convinced myself that I'm not aging or getting older. So it's weird having people say, oh, how does it feel? Happy birthday. And I'm like, what are you talking about? I don't feel it. I don't feel a day over. I don't feel any older today.
I'm just glad you're getting 1 year older and closer to me.
Yeah, that's right. Well, I'm doing great though. I've had a good week and I'm excited because I'll get to see my whole family tonight. We're all getting together. The wife and kids are taking me out for a nice steak.
That's fun.
That'll be fun. Yeah, it's actually we're going to one of the oldest. It's like we used to call it. My parents back when I was a kid called it a supper club. It's an old char house, Mancini's char house. So
sure,
it's great.
So how many people are going to be coming?
I think there'll be 6 of us.
Okay, that's
maybe
nice
7.
Number.
Yeah,
that way you can all have a conversation, but have little asides too.
That's yes, nice. Exactly. It's a good group. They've got reservations, so it's all set. I don't have to worry about anything. I like that. So, taxes though, obviously this is the time of year people are thinking about taxes. But a lot of people don't think about taxes in retirement, or if they might not know about specific tax breaks if they're for those people who are 50 and older, which now, it includes me. We know that. Yeah. So you're younger. I'm sure you're younger than me though, Chris. That's
I don't think so.
Are you even in that 50 or older category?
Oh my gosh. Don't be funny.
But obviously, I'm looking forward to the show. I think that it's a good topic. So where do you want to begin? I know we're talking about tax breaks for people 50 and older, and there's a lot here.
So the first thing I want to start with is for folks that are over 65. There's a larger standard deduction for those folks. So it's something that they need to look at. The standard deduction for people in this age group is $1,750 larger than the deduction for people younger than 65 who are filing as individuals. Now, for married couples, they can bump up their standard deduction by $1,400 if one part of the couple is at least 65, and by $2,800 if they are both at least 65. So additionally, if somebody's legally blind in the family, you may qualify even for a larger standard deduction. So be sure and talk to your people about getting those deductions.
Yeah. Well, and taxes and how they fit into your overall financial strategy, that's a great reason, once again, to work with a financial professional like yourself, like you and Tara. I think that's so important because there's so much going on here. And even better, work with somebody like yourself who's going to work alongside a tax professional or CPA,
Yeah,
and have them as part of the team because that kind
always.
of gives you that, yeah, that 1-2 financial punch. And if you don't already work with a tax professional, I know that you and Tara can give referrals to people if they need it
Right.
to help them with this. I know you have, the people your clients are working with and you work
Mhm.
alongside. So that's an important aspect of all this, isn't it?
Yeah, yes, it is. It's really important to seek professional advice when you do your taxes because they're getting so complicated. The Secure 2.0 Act came out last year. That has changed things. There's so many things that have changed, and those professionals stay up with it, and will keep you straight. So
Yeah.
the next thing I want to talk about is older folks are also allowed to earn a little more than their younger counterparts before they're required to submit a tax return.
Oh,
So those who are at least 65 may tally a gross income of as much as $14,700 before they have to file a tax return for 2022, which is $1,750 more than younger workers. So the tax filing ceiling is 28,700 for couples. So if both spouses are at least 65 and 27,300 if one of the spouses is at least 65.
yeah.
So the ceiling for younger couples is 25,900. So that's a difference. Something you
Yeah.
need to bear in mind that folks below the filing ceiling may want to submit a tax return so that they qualify for various tax credits or potential refund or of income tax that was withheld, but you may not have to file a tax return if you're
Yeah.
not earning that much money.
True, but you make a good point that they still might want to because
Yes.
even if they don't have to file a tax return, it doesn't mean that it's in your best. It might be in your best interest to still do it. And
Yeah, if you're a W-2 earner, then they probably took taxes out. So you
yeah,
probably want to go ahead and file for that.
yeah,
Now, if you're just a contract worker and you get paid cash for your time and nobody's uh, submitting any Social Security, any benefits out to the government or taxes out to the government, then you don't have to.
yeah, interesting. That is interesting, and I think that's really good to know. And the rules do change, and the amounts change once you pass the age of 50, or and then again at 65 for those changes at 65. But a lot of
Yep.
people don't realize that there's a lot of rules out there. So, what else do you want to talk about?
So while property tax rules are often vastly different state by state and by jurisdiction, right? In some locations, folks above a certain age who also earn less than specific incomes may qualify for property or school tax deferrals or exemptions or the homesteading for their properties.
Huh?
In Colorado, you can get some breaks on your property tax through homesteading once you are retired and have been in the house long enough. Something you should take a look at. So, for Texas, in that state, homeowners who are at least 65 are eligible for a $10,000 homestead exemption on their school district taxes, in addition to the exemption that's available to all Texas homeowners. And so
Wow,
those are huge exemptions in Texas because property tax down there, Texas has some of the largest property taxes in the nation,
really? I didn't
for
know that.
individuals. Yeah, they were about 4 times, the property tax when I used to have a house there, and then we also had a house here, and the property tax was 4 times as much
Oh
for
wow,
a similar house.
yikes!
So here in Colorado, I think you can get half your property tax taken care of through that homestead exemption. So something really to go look at once you're over 65. Maybe you might be qualifying for a big break in your property tax.
Yeah. Well, and I don't know about you, but the more I'm more than happy to fill out some extra forms to keep more money in my bank account, right? To minimize that tax burden. Really, what we're talking about all this for is to find ways to minimize your tax burden. That's what the show
Oh
is
yeah.
about today.
My neighbor told me about the Homestead Act that she just turned 65. She went down and did it a couple of weeks ago, and so she's pretty excited that she's going to get to cut her property tax down. Property
Wow.
taxes in our county have gone up. They've probably doubled over the last 6 years.
Yeah, so
Uh,
so have mine. Yeah.
yeah,
Ours have more than doubled.
yeah, it's because of rising home prices and then just
Yeah,
the
but
way
Chris,
that it
when the
works.
prices are starting to go back down, if the price of my house falls, are they going to lower my property taxes?
Y- y- So yes, that
No.
the easy answer is yes, but you may have to tell them that
Yeah.
you're wrong on my assessment. It needs to be lowered to this because it's now this. And so you can do that. You can negotiate with the county about the value of your home.
Yeah. If you
Um,
don't,
without
the where I live, Chris, if you don't say something, they're never going to lower the taxes.
r-
It may
r-
go up,
yeah,
but no
yeah.
matter what happens to your house, they don't go down.
Well, even if yeah, and even if they do lower the assessment, it's not gonna be very fast, right? They're not
It's
gonna
not gonna it's not gonna drop in
no,
half like it did when
no.
it went up, right?
Oh, right.
That never it's funny how that works, right?
Funny how that works.
Yeah. Or doesn't work.
Yep.
So what do you have for us next? What's another way that we can minimize that tax burden?
So there's a special tax credit for lower income people that are at least 65. Um, so if you qualify for this, you may be able to reduce your tax bill by utilizing this credit. Here's how it works. So
Sure.
your adjusted gross income must be below 17,500 for an individual or 25,000 for both you and your spouse who are at least 65, and your non-taxable Social Security and pension income must be below 5,000. So I'm not sure
Wow.
that too many people are going to qualify for this.
Well, hopefully
Um,
not. Hopefully they
hopefully
won't
not.
qualify because that's well below the poverty level. And
It
I think
is.
at that point, it's the least they can do. But you never know because, that
You don't know.
adjusted gross income, sometimes there's ways to have income that doesn't count toward your adjusted gross income. So,
Right. So
so some people may find themselves in this situation. It's
so
possible.
if my grandparents are still alive, they might qualify for this.
Yeah.
But if, not too many people in our generation will ever qualify for this because Social Security benefits are going to be too high. And that's just the way it
Yeah,
goes.
that's true.
Um, but back if you retired in the 70s and 80s and your Social Security is not that great.
No, no. I mean, it's still not great, but it's, and you still can't live off just your Social
Oh
Security.
no.
And that's the problem right there.
Yes.
But before we go on, I think that point right there and just what we're talking about today, a lot of our listeners may have questions, and I would encourage them. You have to be working, whether it's Chris and Tara or someone else, you
That's right.
need to find a trusted financial services professional. So let's take a moment to let our listeners know how they can set up that complimentary consultation. I know you and Tara are offering a complimentary consultation. There's no charge, there's no obligation, and you'll meet with them to see where they're at and run some reports for them. How do they do that?
So if you're listening to this, call the number 719-210-4242. We'll set up a complimentary consultation. Mention the radio show. You don't have to call right now. You can call during the week, but make sure you mention the radio show to get that complimentary consultation. Okay. We have a few days set aside each week between Tuesday and Thursday that we do those. So they do have some limits there on our time because we've got to take care of our current clients too. We can't
Yeah.
just always take care of our listeners all the time.
Yep.
Sometimes we have to take care of our clients.
Yes.
So please give us a call. Go out to our website at nolanfinancialpartners.com. I want to reiterate that number. It's 719-210-4242. Give us a call.
All right. Well, thank you for that information, Chris. And we're going to jump back into our topic, which is minimizing that tax burden for those 50 and older. And it sounds like there are a lot of tax breaks out there for people 65 and older, especially a lot of these IRS rules. And I'm glad you're deciphering some of this today and bringing this to our attention. It's been good. Your individual circumstances are going to vary. Everybody's situation is different. So you may not qualify today,
Right.
but you may have a loved one that will, or you may find qualifying for just one or two of them can make a difference, depending on where you're at. So you were talking about potential tax credits for the elderly and disabled. What else do you have for us?
So older folks may be able to defer paying income taxes on more money than younger people by contributing to an IRA, more often referred to as simply as an IRA. Sorry.
Yeah.
Folks who are at least 50 may have an additional 1,000 in an IRA for a grand total of 7,500 in 2023. So as a 50-plus-year-old worker in the 24% tax bracket who maxes out their IRA, you could save $1,800 on your current tax bill, which is $240 more than the maximum possible tax break of the $1,560 for a younger person saving for retirement who is in the same tax bracket.
So they bump it up for older folk.
Yep.
As we get older, we can actually contribute more to our IRAs or
That's
our
right.
individual retirement accounts is what you were trying to say there. Yeah.
Yeah, the individual retirement accounts. And so I've got a client and they try to put theirs in at the beginning of the year every year. This is a great year to get your IRA filled early as the market is down and has been hesitant about going full go forward, but we know it always recovers.
Yeah.
So it's a good time to put money into an IRA. So if you don't have one, give us a call at 719-210-4242 and we can help get that set up and how to manage that, right? It's a big deal to be able to defer taxes.
Yep.
So older folks with low and moderate incomes who are kicking money into a retirement account may also qualify for a saver's credit.
Oh,
so
wow.
in 2023, an individual with an adjusted gross income of up to $36,600 may qualify for the saver's credit. So if they're contributing to a retirement account, so that there are a lot of people that have less than 36,000 of income, right? It's not money. We're talking income money, not actually just holdings, right?
Yeah, not assets, but income. So there's a lot of
Right.
people that may fall into this category.
Yeah, that's right. And so
If
there's
they're
more
older.
people may qualify for the saver's credit. So heads of household are eligible for that saver's credit. So and if you're the head of household, the AGI goes up to 54,750. So, and then if you're a married couple, that's 73,000 in AGI and remain eligible for that saver's credit. So
that's adjusted. So if you're a married couple, and you have up to 73,000 in adjusted gross income, which a lot of people will fall into this category, especially if they're elderly. So that's anywhere up to that amount. They would be eligible for the saver's credit if they're contributing to some type of retirement account, is what you're saying.
That's right. That's right.
And a lot of people don't realize that they can get that. And that's a big, I think that's a great point. So they should bring up the saver's credit with their tax professional and make sure they're working with somebody like yourself.
Because you can save in retirement while you're spending your money to retirement. You can still save.
Yes.
And I encourage everybody to do that at least for the first half of their retirement, what they think their retirement is going to be. Need more money as you go through. That's just the way it is.
Yeah, I mean, if you have an IRA, why not keep putting into it so it keeps growing? And
that's right.
Yeah. Well, and
So
I think if in doubt, work with somebody like yourself, right, Chris?
yeah, getting these credits and getting those the tax credits, the savers credit, all these things that people might be eligible for. Um, you know, I don't know where they are in the 1040, but we can help you find somebody that does. We can point you in the right direction. So give us a call. We can help you out there.
Yeah, I think that's great. So what's next on the list that people need to know about?
So there's some good news about 401ks. So older workers who have access to their 401k funds may be eligible to contribute catch-up contributions. So folks who are once again at least 50 may defer paying income tax on $7,500 more than younger workers if they contribute that amount of money to their 401k plan. So for that's a grand total of $30,000 a year that you can contribute
Wow.
into a 401k when you're over 50. So that's a lot more than the 22,500 that you can put in
Yeah.
when you're under 50.
Yeah, that's
S-
huge. So that's good.
Yeah. So if you're in that 24% tax bracket, that's a considerable savings on your current tax bill. And that's something that you should look at. Now, I always talk to my clients that, hey, before you do that, let's make sure we talk about is this the right thing for right now? How are your taxes going to look in the future? How does this work into your plan? Because once we get over 50, we're really starting to plan for retirement. We need to consider the tax ramifications of deferring all those taxes into a 401k or an IRA. Maybe we want to look at a 401k Roth, maybe a personal Roth, those kind of things to offset that tax bill that we're building up in those deferred tax qualified style plans.
Yeah. Yeah, that's a great point. And it makes me think also another thing that you want to avoid and that can save you, especially if you're 50 or older, is the withdrawal penalties. You've mentioned these on past shows. I know
All
I've
right.
adjusted my thinking thanks to some of your advice when it comes to your finances based on what you say about the penalties. That can greatly affect what you do. I'm curious about the impact of early withdrawals on older workers.
So there's no longer the 10% early withdrawal penalty. After 59 and a half, that goes away. So that's the key thing to look at.
Right.
Now, you have medical expenses, health insurance premiums. Who knows? Maybe you're still paying off a college debt. We have clients in their 70s still paying off college
Yeah.
debt because they
And
went to
you can
school
use,
later.
even if you're not 59 and a half, if you're over 55 or over 50, I think it is, you can start taking money out for some of those things, right?
That's right. It's
Okay, without penalty.
without penalty.
Yeah.
So you still have to pay the taxes on those distributions,
Oh,
but
sure.
that 10% penalty goes away.
That's good.
So it's something to look at. If you need money for those kind of things, you want to be able to access that because you don't want to just let it sit out there on a credit card, especially with today's rates.
Oh, yeah.
Uh,
Yeah,
you
so
want
if you
you
have
want to get
any of
those
those,
paid
what
off.
were those things you named again that you can use it for if you're 50 and older?
So medical expenses,
Yeah.
health insurance premiums, and some college costs. So you can get those
Yeah,
early
even for
withdrawals
your
to help you.
children and grandchildren too,
Yeah,
right?
that's true. Even or your spouse even.
Yeah, that's awesome.
Don't forget your wife, man. So yeah, children, grandchildren, spouse, you can help cover college costs um and draw money out without having those penalties.
But
So
you have to be
if you want to do that.
careful, how you do that and work with a professional because,
Yeah,
like you said, if you're over 50 but under 59 and a half, those, like, 9 years in there, you cannot withdraw without a penalty unless it's for one of those things, and so you gotta be careful, otherwise you're gonna get hit with that 10% penalty, which is just another reason to work with a financial advisor.
Right, and these rules are changing. The Secure Act changed a lot of things for, IRAs and retirement accounts, so we gotta make sure that we're sticking with the current laws.
Yeah, I think that's so important. So, we've covered a lot. We've covered avoiding withdrawal penalties. We've talked about catch up contributions if you're 50 and over.
Yep.
We've talked about a number of, savers tax credits. There are tax breaks for those 50 and older and things you need to know. This has been a great show so far. I think we got time for one more here. What's the next potential tax break?
So the next, potential tax break is something that a lot of my clients have used, is that, you can do qualified charitable distributions,
Mm,
and so you can withdraw money from your traditional retirement account and, pay subsequent in you pay the subsequent income tax bill, um, but if you don't need the money, you can avoid income tax on IRA withdrawals if you make a charitable distribution instead. Now, it has to go directly to the charity, and so you'll need the EIN and all the information about the charity, so you can make it go directly to it. We have specific forms for all our clients to fill out to make this happen. Now you can if you're 70 and a half, if you transfer money up to 100,000 from your RA to a qualified charity, you may not owe income taxes on that transaction as well. So you don't need to make a large donation to see some of these benefits of these particular tax breaks. And then if you're over 73 and you're into RMDs, that's another place to put your RMDs to reduce your tax bill and do something that's nice, make a nice charitable donation,
yeah.
and help people out.
Yeah, it's not just about the tax break. You're actually doing a good thing. And, some people like to give it to their favorite charity or a church. So I think that's really important. I'm glad you brought that up, Chris. And
Yeah.
again, it's another way to, lessen your tax burden. And there you can do it well, doing something good for others, which is always a plus in this day and age. We need to do that. So
Right.
that's a good thing. This is a crazy topic. I know that, the IRS tax code is tens of thousands of pages. And so, and I don't think any one person knows about all the possible tax credits and potential there is out there. But that just illustrates my point that I make over and over. And I don't mean to beat a dead horse, but you've got to work with a financial services professional. And
Yep.
especially if you can find an independent financial advisor who is going to be looking out for your best interests. And I know that's what you and Tara do. So,
Yeah, we
um,
highly recommended looking out for an independent that's not tied to a particular company for their sales or tied
yeah,
to a particular investment group. We
yeah,
go out and look for the best solution for that client at that time, and
yeah.
it changes month to month. These companies change how they uh, what they offer and what they'll do for us. And so we keep our thumb on that line, and so we make sure we can feel when it's changing and make sure that people are getting the best deal.
Yeah, that's a
So
good thing. That's a good thing. Well, we're out of time. Leave your number before we leave. Give our listeners your number and I'm doing a voicemail message all of a sudden. Leave your number. But Chris, give our listeners your number and your web address.
yes, so I know we went over a lot of complicated things and so a lot of numbers. So please give us a call at 719-210-4242. Come into our office and we'll sit down and talk about your specific situation. Um, Check out our website. We've got a lot of good information out there. It may help prompt you on some more questions to ask. So go out to our website, nolanfinancialpartners.com, and give us a call at 719-210-4242 to set up that consultation.
I'm sorry, I had my mute on there when I did my, and that does it for today's episode of Nolan Financial Radio. That's all I
know.
said. But,
I know.
it's fine. It's fine.
It's like, we'll just kill it.
Yeah, just no.
It's
At
done.
that point, go. At that point, you just gotta go, right?
Yeah.
Yeah.
Only the YouTube people will know.
Yeah, exactly.
What happened? to
All
Tony?
right. Hey, it's my
So-
birthday. What can I say?
Yeah, that's right. Well, happy birthday to you.
Thank you, Chris.
It's,
I hope you have
I'm
a
so
good one.
nice to be able to join you on your birthday.
Yeah.
Don't stay at work too long.
Oh, I won't. I'll wrap up a little early today.
Oh,
Yeah.
good deal.
Yeah,
All
I'll be
right.
done by 3, I'm sure. All right. See you, Chris.
Enjoy yourself. Bye.
Yeah. See you.